वेलकम बैक एवरीवन। ट्रेड विद करण में आपका फिर से स्वागत है। एंड इन द लास्ट वीडियो वी हैव डिस्कस्ड हाउ टू मार्क डिमांड जोन एंड सप्लाई zones. We have also seen when a zone gets an achievement. We have also seen how to do multi-time frame analysis. We have also seen how to find the trend of the market and then how to plan our trades according to that. So now we'll see a live example. I have taken Nifty 50 for that. So in that example, let's see what's special about that example first. So on the screen you can see a chart of Nifty 50 in 75-minute time frame. So why 75 minute and all those things will be covered later on, but for now my higher time frame over here is 75 minutes. So let's see how we can mark zones in this particular chart. So let's move forward. So yeah, so over here let me draw it once again for you. So over here we can see a big drop candle, then base candle formations, and then we have a rally candle formation. So we have one zone marked over here, then we have one more zone marked over here, rally candle, then a base candle, and then a strong rally candle. So we have two zones marked in for the demand zones, and now let's see for the supply zones. So one supply zone I can see over here is drop, and then one base candle and a drop candle. And I'll tell you why I have not marked this zone on this chart. So we'll come back to it when we go to the lower time frames. And then we have one zone rally, three base candles, and then a big drop candle. So what does this mean? That this zone is having real strong order flows. So we will keep an eye on this. And then we have a rally, one small base candle over here, and then a drop candle. You can also take this drop, then one small base candle and a drop candle, but I am not satisfied with this because it is also having a big green body. So I have not marked this zone, but this zone is perfect for me. And then we have one rally candle, two base candles, and then a drop candle. And then over here one last zone is rally candle, base candle formations, and then a drop candle. So this is on my 75-minute time zone. So we have number 1 zone, number 2 zone, then we have number 3 zone and 4, and one final one is 5 and 6. So we'll see each and every zone in detail now when we go to the lower time frame. So let's shift to intermediate time frame. That will be 15 minutes for me. So let me go back and yeah, so this is my 15-minute demand zones. So over here how have I marked? So you can see a rally candle, a small rally candle. As I have already told, the in candle need not be a very big candle, and then a huge rally candle. Now you will be asking me a question that in the 75-minute zone I have neglected that supply zone with a very big body in the out candle, but in this case I'm not doing that. So for that you understand, when I add this hidden body, the hidden body is much larger than the actual body of the candle. So I have considered this as my first zone. Then next zone we'll see, we have already marked 75-minute zone here. So in that we'll see one rally, one base candle, and then a rally candle. So on this image it might not be clear, and you will be questioning me like, why have I marked this zone? Because the leg out candle or the out candle itself is very small. Then once we go back to our charting tool, then I'll make this point clear of why I have selected this zone. So now let's go to the other zones which we have marked in the supply zone. So yeah, so in this zone, this was the first supply zone which was available over there. But in this I don't see any what do you say patterns. We have rally candle, two base candle, and then drop candle, but after that we have a big rally candle, and then a sudden or a very sharp drop candle. And moreover, this zone is completely filled, means the market went down, came back, and it is nearly approaching it's the end point. And now if it would have went up till here or 1 paisa above this zone, then this zone would have been violated or broken, then we cannot use this zone. But let's see what's there on the other supply zones for us. So let's go forward. So yeah, so in this screen you can see the other supply zones. So we have one drop candle, two base candles, and then a drop candle. This is on 15-minute time frame inside 75-minute time frame. Then we have one rally candle, two base candle, and then a drop candle. And then we also have one drop candle, one base candle, and then a huge drop candle. So you might ask, this zone is outside my 75-minute zone, but you see over here, this 15-minute zone is responsible for the creation of 75-minute zone. The market went down, came up to this 15-minute zone, and then it created the 75-minute zone. But moreover, we can also see one rally, one base, and then a drop candle. So we have two 15-minute zone within this. One is this and one is this. So now let's move forward and we'll see other zones. Now we'll go to 5-minute time frame. So now within 5-minute time frame, we can see a rally candle, base candles, and then a huge rally candle. One, we can also see one drop candle, three base candles, and then a rally candle over here on the bottom. If you focus here, then on the new 15-minute zone, we have a rally candle, base candle formations, and then a rally candle. So once we'll go back to the chart, I'll zoom in and will show you how I have considered these zones. So now let's move to the other supply zones. So yeah, so this is my first supply zone in the 5-minute time frame. We have drop candle, we have base candle, and we have a drop candle. So now this is 75 minutes, this is 15 minutes, and now this is 5 minutes. So whenever we have a scenario like this which satisfy all of these conditions, that makes our entry zone, that is our 5-minute zone, really powerful zone, and we can expect again a sharp down move from this zone. So now let's see once we go to the next supply zone. So yeah, in the next supply zone, we clearly see a drop candle, base candle, and a drop candle. One more is there, rally candle, three base candles, and then a big drop candle. And over here, this 15-minute zone, I am not satisfied with the structure. We don't have a valid leg-in candle to take in account for, because all of this candle looks the same. So we'll neglect this zone, and we'll focus on two supply zones. One is here. Okay, one more we are having, rally, base, and then drop. So this was my 75-minute zone, then this was my 15-minute zone, and inside that 15-minute zone we have our 5-minute zone, which is this one. So now we also have this, again we have the 75-minute zone, 15-minute zone, and then inside that 5-minute zone. So let's see how it has performed in the market. So we'll go to the real charts. So let me switch it back. So yeah, so on this screen you can see I have plotted, or I have shown you the same chart. So now let me hide it first, unhide the drawings. So now I'll zoom in and I'll show you how I have marked these zones. So we can see a drop. If we add hidden body, then a huge drop candle, two base candles, and then a rally candle. Then we'll go to the next one. We were here, rally, base, and then rally. Now we'll see the other candles. We have a rally, base, drop. This all things are clear. So now we'll quickly go to 5-minute time frame, and then we'll really see what really happened in those zones, and we'll assess the power of high liquidity zones, or we can say supply and demand zone. So we are at the first demand zone. On this, you can see we have marked two zones. one is this one and one is this one, but the market did not came into them, and from the 75-minute zone itself it gave a huge turn. So that means that the orders inside this 15-minute zone and 5-minute zones are still pending, and they can give us a really big move, because 75 minutes itself gave a really big move. Now you can see it just went up up up, and it was not stopping. Then again we have created this zone, and then from this 5-minute zone, as soon as market entered this, you can see over here the market entered here, and then in the next candle itself it just blew up. And then like all these things you can do in the live markets also, and but you need extra precision, extra care while marking these zones. And then if you see, the market went all the way up, and then it started coming down, and finally once again it came to this one newly created 5-minute zone, or tested 5-minute zone, and then it entered it for the first time once again, gave a small up move, then halted for a few candles, 5 or 6 candles, and then gave a really big up move towards the supply zone which we have already marked. So but if you can see, this first supply zone which we have already told, it has already exhausted its all the orders. How that zone itself is completely wiped out without any interference, without the market going downwards, it has been violated. So what we'll do is, once that zone is violated, we'll delete that zone. So now we have also marked 3 other zones in this dark red color. You can see number 1, number 2 and number 3. We'll see how they have performed in this criteria. So if you can see clearly, this is my first zone, first entry zone. I would have taken entry somewhere here, and then based on our stop buffer rule, which we'll be learning in the next videos. So you'll understand that why this trade is a successful trade, and because now you'll be asking, it went beyond this 5-minute zone, so we would have exited automatically. So but when we apply stop buffer rules or entry buffer rules, then this problem will be solved, and we'll be having a successful trade. So we'll come back to that in the later videos when we discuss stop buffer values and entry buffer values. So now next zone, if you see this zone, the market went up till this point, halted there for some time, and then in the next 2 candle it gave a really big down move. Okay, so now so this zone has been violated, so let me remove this and this. So this zone, it came here, it gave a very big down move, and then again it started going down, and once again if you see, it came close to this zone and it turned back. So it can mean 2 things, that the market orders are in this particular zone are really high. So that's why as soon as the market is approaching this zone, it's reversing back, and then once the market has reversed, we'll come back to our first supply zone which we have marked over here now. So this, if you have seen, it has been tested once. So when the second time the market enters this zone, we should not be achieving for 80% accuracy or 100% accuracy. The accuracy level when the market goes into any zone for the second time reduces, and like it can become 0 as well, or it can become very less. So in this case, the market went inside this zone and just gave a very small move of just 2 candles, and that's not sufficient for us. But when you see the third zone which we have marked, the market went there, it also gave a very short move. So now you'll be asking, like these are making a very short moves, and then why should we use supply and demand zone? So one condition over here is, we have to go with the trend. If the trend is an uptrend, we should, and if we are taking a sell trade, then we are a fool. So whenever the market is in uptrend, we should always aim for buying. So now buying can be done in these 2 particular zones. One is here and one is here. So you can plan something like this. Once the market comes into this zone, because now it is forming higher highs and higher lows, so once the market comes into these zones, I'll be planning, and the most amount of orders is in the bottom most zone, and I'll recall my words from my previous videos, that we have to find the origin of the move. So now we'll see what really happened. The market was going up, and then after that, after some point, it started coming down, and then with one blow itself, it destroyed our first zone. And then if even if we have taken a trade over here, then we would have exited with some small loss. But now if you see the second zone which we have marked, it gave a really good move. The market went inside this zone and then gave nearly about 300 points move after that, and that's really what an intraday trader wants. And not only once, but second time also it gave a very small move. If you can see, one small move here, one small move here. But as we have already discussed, this zone has been already tested once, so we'll not plan our second trade here. So and that's evident now, it's clearly shown over here. On the second time, if you have taken the trade, it would have given us a very small profit, but it would have eventually eaten away our stop loss. So now yeah, so this was one example for identifying or marking the supply and demand zones. First we go to a higher time frame, 75-minute zones. We have identified two 75-minute demand zone over here, and one and two, one more was here. So two supply zones. Then we went in the 15-minute time frame, and then filtered out based on what do you say, different patterns or the footprints of the institutions. Then we went to 5-minute time frame, and then we confirmed that all the three zones are there: 75-minute zone, 15-minute zone, and 5-minute zones are there. So this zone is having a real order flow, and we can expect a real big move from that particular zone. And the next point we have also discussed, when the market is in the uptrend, we should be aiming for only upside trades, and in a sell side trade will hardly hit 50% or 40% of the time. But if we go with the flow, or if we go with the market, then we are surely what do you say, deemed to be making money. So now one more rule I'll tell you in the quick span. So we'll talk about something about this only. In this second supply zone, you might ask why it gave a very small move. So the simple answer is, there might be a lower time frame zone, a new demand zone created, which pushed the market up once again. And as we have already discussed, this is an uptrend, so we'll be planning for up trade only. So that's is one more what do you say, fact that you must keep in mind. And another fact is, once it enters the zone, let's say we have entered in the 5-minute zone. 5-minute was our entry time frame. So let me navigate back to that particular zone. So yeah, so 5-minute was my entry time frame. So we have entered somewhere here in this candle. Here, somewhere here, we have entered here as soon as it entered the zone. And then we have to see a 5-minute zone or 5-minute opposite supply zone. One is this. So we would have targeted somewhere here. So this was my first target. And then afterwards, if I would have hold it for some more time, then the next supply zone is this rally base candle and then a drop candle. So once it reached here, I would have exited. Then one more is this one, drop base drop. Then in this candle we would have finally exited, because a really big down move started from here in this candle. So this is my third target. So that's how I have already told you, supply and demand zone is having a lot of pros, that our entry is fixed, our targets are fixed, target 1 is fixed, target 2 is fixed, target 3 is fixed. So like this, we have also fixed our what do you say, stop loss below this green zone. And like this, we'll minimize our risk and maximize our profits. So once we master all these things, we'll be what do you say, expert in reading the charts, and then we can say that the market is going to go in this particular direction, like if it comes to this particular zone. So that things are for the later use. But now this is the real life example I've given you of how to mark supply and demand zone. And now in the coming videos, what we'll see is we'll see few relations, few formulas, or else I can say few scores based on which you can judge or plan your trades, whether the zone is really powerful or not. We'll see the conditions, and then based on those conditions, you can plan your trade. And that's gonna be a really fun part, because those conditions are really interesting. And then once you learn those what do you say tricks, and then your perspective towards the market will shift completely. You will not say that Trump said this and that's why the market is falling. Your perspective will change. Then you might be saying, due to the institutions, they have created zone in such a way that the zones might not be visible to a normal retail trader. And in those cases, the real market movers are the institutions. They plan everything way ahead of the time. And if some news comes from Trump today, they might be knowing it one day before itself. And then by the time that news comes to the market, the move which it would have expected to give would have already been given, like, or already would have like carried out in the previous session itself. So those things are there, and everything is planned. So if even if you read the market in this supply and demand zone perspective, you can make out like how real money or the big peoples, how they are trading. So what psychology is hidden behind these candlesticks. And moreover, this is correlated. So if something is happening on the stock market, the same will be reflected on the country's growth as well. And all the other factors, economic factors, will not go into that. So we'll close this video for now over here, and in the next videos we'll come up with new theories or new chapters that will help you leverage your trading furthermore. So thank you so much. Thank you for attending this lecture.